it's your host Rashida Punawala, and welcome back to another episode of GSB Insights, a podcast where we dive into the stories of leaders and innovators across business, finance, and marketing. GSB Insights is all about giving young professionals an insider's view of the business world, global economy, and geopolitics, so you can stay ahead in today's fast-paced market. Today, I'm really excited to welcome Professor Rick Carew to the podcast. He's currently an adjunct professor of finance and economics at Fordham's Valley School of Business, where he teaches Introduction to Value Investing and leads a student-managed investment fund, a $2.5 million portfolio investing across global equities, fixed income, and commodities on behalf of the Fordham Endowment. Beyond Fordham, he had a global career spanning finance, media, and strategic communications. He was a managing director at Sard Verbian & Co. in Hong Kong and spent several years at the Wall Street Journal covering Asia, M&A, private equity, and global finance. He also worked in the research department at Elliott Management, one of the world's leading activist investment firms. In today's episode, he will share insights from both sides of the industry, from Wall Street to the classroom, diving into value investing, global markets, and the role of geopolitics in finance. First off, I want to thank you so much, Professor Carew, for coming on GSB Insights and speaking with us here today.
Thank you so much for having me, Rashida. Great to be here.
Okay, so you started off in journalism before moving into finance. What inspired that transition, and how has your background in storytelling shaped your approach to analyzing markets and companies?
Yeah, it's a great question. So you're exactly right. I started off my career as a journalist for the Wall Street Journal, based out of Beijing and Hong Kong. And, I was very much focused on business, always learning about business, not just, writing stories about a broad range of topics. But I feel like business journalism is a really great background for people who are interested in markets. First off, I've always found that the news and journalism is what I call the currency of business. So if you want to start a conversation with somebody, I found the smartest people in business are always consuming news, always reading what's coming next, and trying to really get ahead of the curve. And, obviously news is generally about what happened yesterday or what's happening today rather than in the future. But obviously the things that happen today really shape what's to come. And I found the best business people are always sharing stories, are always ready to discuss at breakfast, what's going on in markets, because it's such a dynamic part of the business world. And then I'll also just say one more thing about, how storytelling and market analysis interact. When you think about journalism, the first element that you always want to focus on is getting the facts right. So having the correct facts, the correct data is really the core of good business journalism. And one element, the way I translate that into markets, is really thinking about understanding the fundamentals of a business. So if you're going to invest in a company, you really have to begin your analysis with the cores. Is this company making money? Is the product demand growing? Are the margins there to make this a sustainable product for the company? And so that's how I, sort of think about facts and the fundamentals of analyzing a business. And then to your point, which is storytelling and narrative, that's when I think about the price to earnings multiple or cash flow multiple that somebody puts on a company. That's how confident the market is in the future of that business and the sustainability of its growth trajectory or sustainability of its outperformance, versus competitors. And so, narrative, kind of when you write a story about a business, you want to kind of project as to, why this company is so interesting, what makes it different. That's very much connected to the economic moat or the competitive advantage of the business. And ultimately, that's what determines the future multiples that the market puts on a company. So I feel like the two studies are very intertwined. And that's just one example of the way I translate sort of journalistic analysis to market analysis.
Yeah, because I actually consider journalism as another major alongside finance that I wanted to pursue. So I found it really interesting to learn about your background in the field. So my next question is, what initially inspired you to pursue journalism before eventually transitioning into finance?
Yeah, it's a great question. So when I was a student, I studied my undergraduate at University of Virginia. I was really focused on economics rather than finance, and I was particularly focused on economic development. So how can foreign aid, how can sort of global trade really help countries that are, less financially successful, grow, create good job opportunities for people in their economy. And so I was really focused on the development side of economics and business rather than the financial market side. So think World Bank rather than New York Fed or Goldman Sachs. And so that was really my introduction. And China was such a great place to learn about business. And I just really fell in love with journalism right as soon as I graduated from school, because it was a chance for me to continue to be a student and ask questions about what's happening in China's economy and interview people. And I've always found journalists to be a really energizing group of people to be around, because they're always curious, always ready to see how things can change. And I really fell in love with that aspect of journalism early in my career. And I was not as sort of money-making oriented. I was more interested in how can countries get wealthy rather than how to make myself wealthy.
Wow, that's really interesting, especially getting the chance to spend time in China and experience something so different from what we're used to here in the US. You spend a significant time in China and Hong Kong. What are the most impactful lessons from that experience, and how did that shape your global investing perspective?
Yeah, something I really encourage all young people is to do your best as early as you can in your life to travel widely, to meet people of different cultures. Being in a university setting, there's so many opportunities to engage with young people who have a completely different worldview, and you can learn so much from people who are, students at Fordham from Spain or from South Africa or from India or from Japan. There's just so many really wonderful things that you can pick up from your classmates. But for me, living and working in China and in Hong Kong really instilled in me at an early age the idea that the world can be different than what we assume it to be. So just because something is the way things are done in New York or in Washington, D.C. is not necessarily the only way that you can achieve certain outcomes, whether that's policy making, business wise. And as a journalist and somebody living, in a foreign country, I always learned to listen before I speak as one of the kind of big takeaways, because if you're not open-minded, by definition, you're closed-minded. And I always feel like one of the great things that traveling and living in different parts of the world can really instill in you is just a willingness to embrace what's different and find comfort in change. And so that was really a big part of my experience living and working in China in my 20s.
Yeah, no, I totally agree. And I know personally, I really want to study abroad during my junior year in London. I feel like just traveling globally and like seeing other places in the world and how other people live and interact, it's super interesting and kind of like expands your horizons. So, having worked closely with global tech companies, what key differences do you see between the US and Asia in innovation? And what trends are you most excited about today?
Yeah, and just on your last point about studying abroad in London, I would really encourage you to do that. Take advantage of that, and don't just view it as a chance to go to London or the UK. But there's so many places that you can travel to very easily from London. Whether that's Western Africa or Eastern Europe or Northern Europe. There's just a huge range of places you can visit. And then to your question about Silicon Valley tech companies and global tech companies, particularly those in China, which I kind of view the world of tech as really a two-pole world. You have Silicon Valley in the US and California, but also now some infrastructure in Arizona and Texas. And then you have China, which is Shenzhen, Beijing, Hangzhou. It's kind of the core hubs of innovation there. And the two features I see of these two dynamic tech economies is having a huge market and also having that domestic demand for cutting edge products. So obviously the US and China are in a global competitive sort of business competition over technology and who's gonna have the best technological ecosystem. And on one level, that's driven by consumer demand and kind of all of our desire and need to be on the cutting edge of tech, from AI to smartphones to semiconductors and electric vehicles. All of those industries are where consumers want to be ahead, but also the fundamental geopolitical competition between the U.S. and China for military supremacy throughout the world is also a key driver for a lot of that innovation. And so within that, I think we are going to continue to see those two economies be the leaders in terms of development of technology. And I think the very interesting competitive dynamic between the two is that the U.S. for a long time has had supremacy vis-a-vis China in the software space, and sort of what's going on with the most cutting edge software technology that is consumer driven. So think of Instagram and Meta, the power of that franchise. Think about Google search and what they've done there. And of course, more recently, we're thinking about Anthropic, Claude, and Gemini and ChatGPT as kind of where the US has really led the way in terms of software. For China and Asia more generally, hardware has been the sort of core competency for those economies. So think about TSMC in Taiwan as just the world's by far and away leader in semiconductor manufacturing. But you also have Samsung in Korea, and China has taken more and more of that hardware infrastructure, particularly electric vehicles, and also in some of the less advanced semiconductor developments. So, I would say Asia has an advantage in terms of hardware. The US has an advantage in terms of software. It's been very interesting to see how, and I think this is to your question about what's the future, what are we looking for, is this push and pull between software and hardware. So is more of the value in the value chain going to accrue to the software companies like it has historically, or in the future is hardware going to be the main driver of returns? And we've seen the hardware win out a little bit more lately. Historically, software has been the winner. So that's really what I'm focused on, seeing which side of that push and pull is going to be most rewarding for investors globally.
Yeah, and I feel like there's so much happening with tech right now, especially AI, even with the government starting to use it in areas like defense. So what are your thoughts on how AI is going to impact finance and other industries moving forward?
Yeah, it's a great question. And I think we're all sort of starting to see the first few test cases of how AI is affecting, as you mentioned, geopolitics and warfare, which is a scarier part, obviously, of the AI equation. But what's happening in Ukraine as well as Iran and throughout the Middle East is really showing us a little bit of the risks and the dangers of AI and kind of the awesome power that it has in terms of creating an asymmetric battlefield. So we'll stay tuned on that. I'm by no means an expert on the military consequences of AI, but I think we've all seen enough to realize how powerful it can be. Like you said, not just in improving our Excel modeling skills, but actually in terms of real life and death consequences for this technology. So I think we'll all have to stay tuned on that, and something I'll be very interested to see how how governments continue to react to some of the new applications of AI that can be downright scary in some cases.
Yeah. I think it will definitely be interesting to see kind of how this progresses and how the government and other companies uses AI and the impact of that also just on the workforce in general. Are there any elements of your time in journalism that you kind of bring into your investing style that might deviate from like traditional value investing?
Yeah, it's a great question. I mean, I think one aspect, in my journalism career, I spent a lot of time focused on investment banking coverage as well as mergers and acquisitions coverage, which I really loved because it's sort of the highest stakes part of the financial journalism world. And similarly, that's sort of influenced my interest in different styles of investing. So there's a school of investing which is within the value investing tradition called special situations investing, where you basically look at a discrete dynamic, whether that's a regulatory decision, a company that might be interested in buying your company, maybe your company is interested in growing through acquisitions. So these kind of corporate actions or corporate changes where a particular company might look very different in the near future than it did in the past due to getting approval for a new drug or some legislative action that might impact the business. And so it's the element of value investing or fundamental investing that's most closely tied to your ability to understand and interpret news events or change. And so I've always been attracted to that segment of the investing world. And that's one area where I've found that journalism has really helped me. The other part that I've always found I had an advantage with my journalism background versus other investors is the willingness to pick up the phone and talk to somebody and really ask hard questions about a business and not be afraid to engage with a company. I find it's actually shocking to me how few investors make the effort to go above and beyond reading the financials to really understand a business. And there's so many cases where if you look at the numbers on paper, a business looks like it's doing great. But if you actually speak to people about the fundamentals of the business, interview executives, interview competitors, survey customers, you can really gain a much more complete picture of that business and its operations. And just going that extra step in terms of talking to people and really trying to understand the fundamentals of business is a core skill that journalists have, because you've got to talk to people to learn about, to put together a story. And I find that more and more investment analysts could benefit from leaning in a little bit more to that skill set.
Yeah, I completely agree. I think being able to dive deep and understand what you're talking about is so important. For anyone who might not be too familiar, do you mind just breaking down what value investing is and what it entails?
Sure. So in its most simple essence, value investing is the idea of seeking an opportunity to buy a dollar worth of value for 50 cents. And they're kind of two key elements to value investing that have really been part of the philosophy from its very, very early beginnings with Benjamin Graham at Columbia Business School, where he really created two concepts that I think still are very relevant for all types of investors, but are the core of the value investing philosophy. One is understanding Mr. Market, which is the idea that you should not take the market prices that are available for any security in the market as the true underlying fundamental value or intrinsic value, as we would call it. In reality, Mr. Market is there to serve you, not to instruct you. And the way Mr. Market serves you is Mr. Market gives you the opportunity on any given day to buy or sell whatever he's offering at whatever price it might be. And of course, we recognize that the market can have wild fluctuations depending on its mood. And so we always like to say that when you analyze a stock, Mr. Market is there to serve you opportunities to either buy or sell at what you think is a difference between intrinsic value, and they're not to tell you what is the true underlying value of the company. Just the other concept that I think is really important is margin of safety. So the value investing tradition is very much focused on when you make an investment, you want to account for the possibility that you could either be wrong in your analysis or that unforeseen events could take place in the future that might disrupt all of your assumptions that you've built into your financial model. So making sure that you don't, that you're compensated enough in any investment to really encapsulate the fact that things will happen that you don't anticipate. And so it's better to be more conservative than take too much risk. So Mr. Market and margin of safety are the two core concepts of value investing that I think are incredibly valuable today, and what I think investors should take away from the approach.
Yeah, especially to assess your risk, because you really don't know what's going to happen in the markets, and everything's so volatile and kind of anything is possible. You're closely tied with value investing. How do you define it in today's environment and how it is evolving with AI, high growth tech, and macro uncertainty?
Yeah, it's a great question. So I would say that, you mentioned geopolitical uncertainty and what's going on in the world today. And, and most people, I think, instinctively think of that as a problem, a negative, right? If there's volatility in the markets, that makes us all uncomfortable. It's just human nature, right? We want things to be steadily going up and a smooth path to a positive outcome. But we know in reality that's not the way the world works, right? There are moments where things change dramatically, where war is declared, or there's a change in interest rate policy. All of these things are going to cause volatility in the markets. And as a value investor, we want to look at that as an opportunity, not as a problem. So obviously, if you have a deep fundamental understanding of a business's intrinsic value, what you want is you want to be able to exploit the difference between the market price and that intrinsic value. And so if the market sells off and you think the stock you're buying is worth, $100 a share, and the market takes it from $80 a share down to $70 a share, first of all, now you have a greater gap between what you think the intrinsic value is and the current price, which means you have higher upside if your analysis is correct. And then at the same time, you also are getting that gap between $80 and $70 of margin of safety is now increased. So now you have more room for things to go wrong if you're buying at a better price. So value investors, I think, in the truest sense, certainly love to see moments when there's sort of rapid dislocations in the market, and that creates opportunities for smart value investors to come in and take advantage of that gap between intrinsic value and the market price.
Yeah, I think value investing is really interesting, especially the focus on assessing risk, which applies across all types of investing. For students listening, especially here at Gabelli, can you explain what the Student Managed Investment Fund is and what makes it such a valuable hands-on experience?
Rashida, thank you so much for asking about our Global Balanced Student Managed Investment Fund. It's something that I think is pretty special about what we do at Fordham, and I feel very fortunate to be able to teach that course. So the Student Managed Investment Fund is a program launched more than a decade ago by Professor Jim Kelly, who really built an amazing foundation for the program. But it's a 2-semester course. So it's a class that meets every week on Wednesdays in our training room at Fordham Gabelli. And there are 28 students in the course. 14 enter each semester. So there are 14 analysts for the first semester. And then those analysts become portfolio managers in their second semester. And so we have a pairing of 14 analysts with 14 portfolio managers each semester. And they work together on constructing a portfolio of different investments ranging from fixed income products to equities, to commodities, as well as real estate investments. And so, it's a pretty unique experience from what I found is students are come to class really motivated. They have to apply to get in. In fact, today is our deadline for our applications for the fall semester. And so we'll be reviewing a new crop of students that are applying for it. But it's really become a course where students, I think, feel really invested in the experience. And we try to create opportunities for students to meet with professional money managers, put together their own proposals, and they actually have the power to make the decisions. So I teach the course and I guide the students and I offer whatever advice and information and data that I can to help them come to their conclusions. But at the end of the day, the students really manage the fund themselves, and the $2.5 million plus that we have within it on behalf of our endowment. And I definitely do want to call out our colleagues at the endowment, led by Gita Kapadia, who is just an amazing leader there and has been so supportive of our students by making introductions to financial firms that they have good relationships with, as well as coming to speak with our students about what the goal of the endowment is and what our mission as investing on behalf of Fordham is. And so we're really fortunate to have them. And I think it's just such a special experience and something I feel very lucky to be affiliated with at Fordham.
Yeah. No, I know personally, like, I'm really interested in potentially when I get to my junior year, applying for that and taking the course. And I think it's again super great that like Fordham is kind of expanding and diving into things such as value investing and investing in general. I also know that the Smith also does site visits, and last week you guys went to an asset management firm. Do you mind talking a little bit more about that side of the program and what those experiences are like?
So yeah, last Wednesday we went to the office of multi-fund manager Balyasny Asset Management. We met with a bunch of their portfolio managers in Midtown Manhattan. And it's one of the great advantages we have at Fordham is, we're very close to the headquarters or main offices of many global investment firms. And so we have the ability to interact with them, either to go visit their offices, but more commonly to have fund managers and firm founders come visit us at our Rose Hill campus or come speak at events at our Lincoln Center campus. And I'll also add that we have a really amazing lineup of speakers that we bring, and we try to make those speakers available to more students than are just in that class when they come to visit. We also try to make sure that all of our students have access to learning and all the resources that you would expect, whether it's Bloomberg terminals, software tools like Capital IQ. And then I'll also point out that you mentioned applying for Smith in your junior year, but our events, we have a pretty robust lineup of events that are connected to our Value Investing Club, as well as our Smart Women Securities chapter, which is an amazing group of women investors that are available to everybody. So you don't have to wait until junior year to get involved with those. And I know, Rashida, you've been involved with a lot of those so far, and so really appreciate you taking an interest early in your career. And we love to see that from our students when they in their freshman and sophomore year start to build those skills that are going to pay off in terms of advanced classes when you come to our courses, but also in terms of your internship opportunities that you have sophomore, junior, and then upon graduation. So thank you for making an effort to engage with a lot of our events.
No, I want to say thank you, Professor, for actually having these events, and any of the ones I have attended, I thoroughly enjoyed. So back when you were at Columbia, you participated in the Perishing Square Challenge. What makes an award a winning stock pitch, and what advice do you have for our students here who participate in stock pitches such as the Roger Murray stock pitch that we have coming up in a few weeks?
That's a great question. I think the art of pitching a stock investment is something that's a really great skill for all young investors. It really helps to sharpen your focus on not just what you find interesting, but also what professional money managers would find interesting. And I have to just note that we're really, really fortunate at Fordham Gabelli to have my partner at the Gabelli Center for Global Security Analysis, Paul Johnson, who literally wrote the book Pitch the Perfect Investment, and so is kind of the guru on how to make winning stock pitches. But something I've learned from him and my experience at the doing the Pershing Square Challenge at Columbia is that you really have to convince a portfolio manager or fund manager that you've considered every aspect of the business, and also what is the argument against your thesis. So it's very easy to make a thesis and say, I think this is correct, this is why a stock should go up. But if you understand the bear thesis better than any bear could argue it, then that's when you've really done your homework in order to have conviction in a stock idea. So being willing to challenge yourself and consider what are the weaknesses of my argument, not just what are the strengths of my argument, I think can go a long way. And then the other part that's, I think, really, really important, and this ties into where I think my journalistic background has helped me as an investor, is really being willing to go and talk to consumers, talk to executives, talk to competitors. And the more that you can show rather than telling why you know something. So, in the case of our Pershing Square pitch, we were able to talk to sales managers at Motorola Solutions, which is a company that does walkie-talkies and infrastructure for public safety, like police officers and fire departments. And the fact that we were able to prove that they had a 80% market share by surveying many of their dealers, which was never a number that the company disclosed, gave us a lot of confidence. And we could show the people we were presenting to, let me show you the data based on what people who are actually selling these products, are telling us, as opposed to, we think they have an 80% market share, right? So there's a big difference between actually, coming up with the evidence versus sort of saying, yeah, I kind of read this and it sort of seems this way, but actually showing people with data and with proprietary interviews, why you have a view that's different from the market and how you can back that up.
Yeah, I completely agree. Being able to back up your thinking, clearly explain why you're picking a specific stock, and having data to support it is so important. For students looking to break into finance, what skills or experiences do you think are the most important to develop? And what are some common mistakes they should try to avoid early on in their career?
Yeah, it's a good question. I would say, there's always a balance you need to have in the world of finance between having the sort of hard technical skills of financial modeling and investment analysis, kind of the math side of the equation, with the communication skills and creativity that I think is required to be a successful analyst. So I definitely encourage students who are looking to get into finance to really lean into the financial modeling and three statement kind of model skills that are really required to break into investment banking or investment analysis. So I would say that's probably item number one. And then item number two, which is a little bit more on the creative side and developing your way to articulate your investment approach or different investment ideas, is I'd really encourage students to read about great investors. Find somebody whose personality or style matches your own. I find that so many investors, especially early on, we think Warren Buffett is one of the greats. So much respect for him and what he's built at Berkshire Hathaway, but he's not the only great investor out there in the world. So I really encourage people to read more broadly and study investors. There's a great series by John Train called Money Masters, and he's written several books about different investors and their approach. There's also Jack Schwager has a Market Wizard series. So if you just kind of read about different investors and their backgrounds and try to find somebody who fits with you, I think it's a really important skill for a lot of investors, because not everybody is going to, on day one, feel a complete fit with the Warren Buffett style, and it's better to read more deeply about different investors than just so early on just pick one approach and think it's the only way to become a great investor.
Yeah. Do you have any investors that you look up to?
I mean, there's so many wonderful investors, which is to my point about how, there's so many different ways to find success. But, I think two investors that I would encourage listeners to learn more about if you're not familiar with them. One is Stanley Druckenmiller, who was one of the leaders at George Soros's hedge fund, and he runs a family office now called Duquesne Capital Management, I believe, but Duquesne is the name of the firm. And he is a really smart person in terms of taking macro trends and figuring out ways to put on big trades that could take advantage of those changes. Also, somebody who's very open-minded and flexible in terms of what he'll do as an investor. The other one who I really admire, and some people may have heard of him, but he's a little bit less high profile, is Li Lu, who runs a firm called Himalaya Capital. And he's been pretty closely associated with the Warren Buffett and Charlie Munger school of investing. He's managed a portion of money for Charlie Munger's family, and was also the investor that brought BYD, the Chinese electric vehicle company, to Berkshire Hathaway's attention. He does amazing due diligence on companies before he invests, and one of the most driven, smart people that I've ever had the chance to be around. So really, really admire Li Lu and Himalaya, and always keep an eye out for what they're doing and what Li Lu says publicly.
Yeah, I'll definitely look into both investors and their strategies and try to keep up to date with what they're saying about the markets and investing. With crypto, ETFs, and digital assets becoming more mainstreamed, I was wondering what your take on crypto was, especially when it comes to investing.
Yeah, maybe this is my point where I should say nothing I've said in this interview should be construed as financial advice, and you should always do your own research. But I think in terms of cryptocurrencies and Bitcoin, look, I think it's a fascinating market and something that I'm continuing to do my best to learn more about all the time. I think that's part of having a open mind, is continuing to not be so narrowly focused on this is something I should never invest in or I should exclude. Clearly, our financial system has some infrastructure that's not, incredibly modern and could be improved. And blockchain technology is certainly has some advantages where it could be used to modernize some of our financial infrastructure. And I'm very curious to see the interaction of existing Bank of International Settlements, our SWIFT system, and how that interacts with many of our sort of cryptocurrencies or some of the dollar equivalent crypto assets. So I'm very curious about that. I would say in terms of, one of the challenges that investors face for an asset like Bitcoin or Ethereum is it's very hard to get a grasp of the intrinsic value of these assets. So there are some ways to estimate, supply and demand for cryptocurrencies, but it's much harder to have a fundamental valuation because, for Bitcoin, there's not a huge amount of transactions that are happening for physical goods to be able to establish, the price or the value of it. in a way that there is for a dollar, a US dollar. You kind of know what you can buy for one US dollar, because Bitcoin has been more of a store of value rather than a means of exchange. It's a little bit hard to put a fundamental intrinsic value on those assets. So that's kind of where people struggle with valuing it as value investors. And by the way, that's a similar problem for other commodities like gold. So a lot of investors, struggle with that. And traditionally, the value investing approach has stayed away from assets where there's no cash flow associated with that asset. Stores of value depend a lot more on people's perception rather than how much cash can I produce from this in the way of a share of a company. You can form a pretty reasonable estimate of where you see the future cash coming from that asset, whereas it's much harder for gold or Bitcoin. So no financial advice there, but just a little bit of the way that I would think about cryptocurrencies, and kind of the way that, one of the reasons why value investors might struggle to invest in cryptocurrency, whereas many tech entrepreneurs are much more open-minded to that.
Yeah, I think it'll be super interesting to see how this all plays out over the next few years, especially the impact of crypto and digital assets. I know some of the banks are starting to move towards stable coins and digital currencies, so I was interested in hearing your thoughts on that and how that compares to traditional banking.
So I think it remains to be seen how these things develop. I would say that, you asked a little bit earlier about the geopolitics of financial markets. And I think one of the really interesting elements we're looking at right now is how should we be thinking about the global financial system interacting with, as you mentioned, stable coins or other types of digital assets that are not denominated in US dollars, or not strictly within the traditional financial payment system. And a lot of countries that have been cut off from kind of the US-led global payment system have tried to move into other assets. So you generally see, countries that we think of as sort of bad actors on the global stage are very eager to embrace cryptocurrency. So, you can think of North Korea as an example, where they've done quite a bit in that area. So the question will really be as to whether more and more payments are being done in cryptocurrency. There's more and more uses of it within the financial system, and there could be a tipping point at some stage where it just becomes sort of obvious that that's the way the future should be. But I don't think we're quite there yet, and so there's still a lot of uncertainty about the extent to which blockchain technology or stable coins can be a effective replacement for some of the legacy global financial payments infrastructure.
Yeah, I think it'll be really interesting to see how this all progresses, especially how the rest of the world responds to digital assets and currencies, and what that will ultimately mean for the future of finance. So my final question is, do you have any advice for our students here, or any final thoughts you'd like to leave our listeners with?
Well, first of all, Rashida, thank you so much for having me on this podcast. I'm really impressed by the great start you're off to, and I'm really excited to be supportive. And, I think probably the biggest thing for me that I focus on is just making sure that our students have a great experience. One of my things that brings me joy in life is seeing young people like yourself achieving their goals and their dreams and building a great career. I think all students come into college with a lot of uncertainty about the future, and now is no different than any other era where there's a lot of uncertainty about future career prospects with AI. But really to see young people like you and our other students finding success and having fun and building a community of like-minded professionals, that's really where I get a lot of joy being a teacher. And I've had so many teachers in my life, a high school economics teacher, Les Schreiber, a college economics teacher, Bruce Reynolds, my Chinese language teacher, Xin Liang. And these people, they really shaped my trajectory of my life. And one of my great hopes is that I can shape the lives of students in my courses for the better and help them to achieve what they want in terms of their professional careers. So that's sort of maybe a little bit of a message, is to continue to pay it forward. The people who have helped you, make sure that you help the next generation. And I see that with our students who enjoy mentoring each other and really embrace the idea of having a really strong community that's more about helping others than just what they can get for themselves. And so many of our students in the Value Investing Club and Smart Women Securities and Smith go above and beyond every day to help each other. And so it's something I feel is really special about Fordham and our investing program and sort of the community of students that it attracts. So thank you for doing your part, and thanks for having me on the podcast.
No, I want to say thank you so much for coming on the podcast and for your support. I really appreciate it, and it really means a lot. So thank you, Professor.
Great. Thank you, Rashida.
Well, that's all I have for you guys today. Thank you for tuning into GSB Insights. Until next time, continue to learn, grow, and gain insight. I'm your host, Rashida Punwala, signing off.